Good morning, everyone. It's Henry on the live stream. I appreciate you all for tuning in. I hope everyone can hear me and can see my screen very clearly. If you cannot hear me or cannot see my screen very clearly, please indicate so that I can have that fixed before we commence. So in today's live stream, we're going to start by talking about the US dollar index and what the market is doing so far. And like I said yesterday, if this key level fails and we rally above it, then there's a very high chance the price could potentially be hunting for this buy side liquidity, because we do have a low resistance liquidities resting right here at this highs. So I'm not going to be surprised if I do see price gravitate above that high to run the buy side liquidities. And so far you can see how price edged higher. I said if we are to go to the downside, I want to see this key level stay sustained, but as you can see, price has rallied above that key level, showing us more momentum to the upside. So all we can do now is to look for potential areas the price could head to and then take advantage of that. And looking at this right now, this is the next drawn liquidity for me on the US dollar, and after that I wouldn't be surprised to see this being the next drawn liquidity, because we still have this ample huge inefficiency resting right here. So I'm not going to be surprised to see the market expand into that key level. And if we're trying to measure how many percent that is going to be from the current price action to that key level, so right here, from where we are right now to that key level to that inefficiency is about 2.45% move to the upside, which can actually be achieved in a week depending on how volatile the market is. And in this case, you can see it's not really so far away from where we are right now. So I'm not going to be surprised to see the market expand into those key level. So right there, it's literally about 2% move to the upside. So it can be achieved in a week. All we need is just 1% move per day, and in 2 days we're there. So that is what I'm watching for the dollar, and we're gonna see whether whether there's gonna be any sort of expansion due to probably high impact news or whatnot. So that being said, the next thing we're gonna be looking at now is to see what is happening on the Euro US dollar. So this simply means, in my opinion, there's a very high chance that Euro US dollar is gonna run this sell side liquidity. I'm not gonna be surprised to see a run on this sell side liquidity resting right here. So potentially there isn't really any need to look for any potential buys from any of these key levels. It just simply means that these key levels are going to be the next run on liquidity, and price could potentially be hunting for those lows, because anyone who was in a buy position from this low, they would have thrown their stop loss to this low. So I believe this is going to be the next run on liquidity. And we do have a lot of high impact news coming out today on the euro, so we're going to also check that out before we'll finish the live stream today. We're going to check that out to see the high impact news we have today, what time they're coming out, and all the rest of them. So that being said, nothing really much happening today. The market just tanked this morning with the first high impact news dropping. The market literally tanked. So traders that were buying from this key level, this would have been a perfect area to close positions. Price mitigated the inefficiency, and the next thing we saw was a displacement to the downside. And that is it for euro. Now we go to the pound. Thank you so much for your confirmation. I'm going to adjust the date. Today's date is 21. Thank you for your confirmation. I've adjusted the date, so it's supposed to come up in a few moments. So looking at British pound, US dollar, what I'm anticipating to see for British pound US dollar, I'm still very bullish on British pound US dollar, irrespective of the fact that the dollar is showing me a lot of bullishness. Pound is showing me bullishness too. And if we look at the interest rates for the pound is currently at 5.24, and the current interest rates for the dollar, I think it's still very similar to that. So economics, So right here, we can use this site to check the current interest rates. And as you can see, for United States, interest rate is 5.50. That's why we're seeing dollar edge higher. And for euro, interest rate is 5.24. That is why we're seeing euro edge lower. And pound is 5.24. That is why pound seems stronger. This is one of the reasons why I'm looking for a potential sell on euro GBP, a swing sell, because pound is stronger than euro. So looking for trade setups on euro GBP, looking for a sell is high probability. And you can see basically how it's been edging higher into my point of interest. So my point of interest is right here. Potentially, I want to see a run on this liquidity. If I can see a run on this liquidity, the buy side liquidity, low resistance liquidity, if I can see a run above it right there, I'll comfortably be looking for a sell from there for this to continue to the downside. So price has really been lethargic, going up, down, but I'm patient. I'm going to wait. Whenever the market decides to come up here, it's just about a 1% move to the upside. It can happen in a few days, in a week, and price will literally be there. And then the next thing I'll be looking out to see would be for a shift in market structure on 15 minutes time frame. I'm satisfied with that, and I'm looking for sell, and I'll be selling it to run this low, and eventually even looking for significant lows like this low resistance liquidity here. I'll also be targeting that, and as you can see, we're having inefficiencies here as well. So this is the very volatile pair as well. You can see the wicks, how price is literally expanding and dropping wicks. That is one of the reasons I don't really like trading the pair so much. But if we're going to enter any trade on it, it's going to be with low risk, 0.1 to 0.3 max. Nothing more than that. We're not risking 1% on trades like this. So going back to my analysis, as you can see so far, the pound is holding on stronger than the euro. And on the pound, on the weekly, as you can see, we have this low resistance liquidity resting right here. And as you can see, how price nicely came to the downside, mitigated this position, inefficiency, expansion, leaving an inefficiency resting right here on the weekly time frame. So all I'm anticipating to see is a mitigation of this inefficiency, and then I go to daily time frame to see a potential confluence with that. And here we still have an inefficiency on the daily time frame as well. And if we go to 4-hour time frame, the only thing we can see that there is liquidity. So all I'm paying attention to is a shift in market structure on the 30 minutes time frame from this key level. Once I see that, I'm looking for a buy. And so far, price has mitigated that position, and we're seeing this rejection. So if for any reason we'll break above this 30 minutes high right here, then I'll be looking for a potential retest at the highs. That will be my entry. Stop loss, the low right here, maybe 2 pips below this low will be my stop loss, and then potentially take it to the upside. So that is how I'm going to play this, because from my experience trading the pound, it doesn't really move like euro, where we have break, retests, and potential another break of structure, giving you multiple breaks of structure. Euro doesn't do that. The moment it breaks structure, it's gone. There's no time to just mess around. It just breaks structure, one retest, stop, and it's gone. And the reason is because the interest rate is high. So if the interest rate for any pair is high, it's going to be very, very exponentially bullish. Sometimes you can see other pairs going down, and you literally see that pair just explode. And this is an example of that. You can see how this exploded to the upside on the 12th of June. It's exploded to the upside. And now if we go to euro on the 12th of June, you can see 12th of June is here. Euro was literally creating lower highs and a lower low, and a lower high and a lower low. On 12th of June, it literally created a lower high and then dropped. But on 12th of June, look right here. This literally exploded to the upside. On the 4-hour time frame, it created a higher high. So this is when SMT comes into play, but I really don't want to go into that so much, because it can be quite confusing a lot of the times if you've not really had a lot of experience or understanding of what that is. So that being said, I'll be watching this very closely. I've already put my alerts right here and I'm waiting. If this gets broken above the high, then I'll potentially look for a buy for the pound US dollar. So we look at our analysis on US oil. So far, US oil is still ranging to the upside. And personally, I wouldn't really put my money on it where it is right now. But if I do see price come to this extreme level, that's when I'll be looking for a 5-minute shift in market structure to get into a buy position. But if I don't see it, then I'll still just have to be on the sideline, because if I don't see a break of structure and then a retest, I get in knowing where to place my stop loss. Because, for example, if you wanted to buy from here, let's say price came to the downside, yes, this is where I wanted to buy from, but there wasn't a break of structure within this key level. So where am I going to place my stop loss? It just simply means I'm either going to take the trade without using a stop loss, or I'm going to basically just use an imaginary stop loss, which is something I would never recommend you doing. Just using imaginary stop losses. Yes, I missed out on this trade. It's a very beautiful trade, over a 9,000 pips move. $10 per pip, I'm up 90,000 on this trade. You can see that from this low to this high, 9,479 pips. So it's a phenomenal trade. If I was risking $10 per pip, I would have made $90,000 just on this one trade. But guess what? If I had taken that risk, this also could have wiped out that account if it went the wrong way. So sometimes we do consider and say, oh, if I had done this, I would have made this, I would have done that. But also think about the fact that if you had taken that decision and taken a loss, it would have wiped you out. So the first thing in trading is capital preservation. Then the second thing is capital appreciation. So you have to preserve the capital first before thinking about making money, because if you don't preserve the money and then blow it all, there wouldn't be any money to use in making more money. So that being said, that is my analysis on US oil. Nothing really exciting happening with US oil so far. And for gold just seems to be in a very weird condition, just going down and up. I really don't like trading when price is just indecisive where it wants to go. Personally, I still remain overall bullish on gold, and I still wouldn't be surprised to see gold react from this key level and still come down to the downside. But I wouldn't be surprised to see that happen, but at the same time, it doesn't mean it's not possible for gold to continue higher. 100% possible gold can continue higher, running above this buy side liquidity, because overall I'm bullish on gold. The only reason why I'm anticipating to buy from here is because this is the key level where we have an inefficient price action. And if we go to the monthly time frame, you can still see it very clearly right there. We have the inefficiency, and we go to weekly. On the weekly time frame, you can see how price left this liquidity, mitigated this inefficiency so far. As you can see, after we mitigated the inefficiency right here, firstly, now we want to see a potential 4-hour break of structure to the upside. And right here you can see we'll have a high, we'll have a low, and then we'll have this break of structure. After this break of structure, price came down for mitigation, expanded, dropped, took liquidity, and then we're seeing all these moves. So personally, I'm not on any trade on gold, and I do not have any intention to buy or sell gold right now, because the price action is a little bit, it's not really the best right now. It can continue higher and it can still come down, but if I want to buy, I want to buy where I've already outlined, which is this key level, this liquidity. I would like to see price take this liquidity before I look for potential buys to continue to the upside. So that is my analysis on gold. If you do have any questions, feel free to drop in the chat. So the next one we're going to look at is AUD US dollar, being quite it's literally been in a consolidation since on Tuesday. We've literally been at the same position since Tuesday. Literally been there, went down, came up, and then went down a bit again. We're literally almost at the same position. I remain overall bullish on Aussie, and one of the reasons why I think price is doing what it's doing right here is because this is an extreme premium. So even if we're going to continue higher, I really would like to see this kind of lethargic price action right here, because a lot of traders are going to be selling from here in anticipation for it to continue lower, while a lot of traders are also accumulating more buy positions for it to continue higher. So one thing or the other could happen. Price could still want to run buy side, wipe out anyone who sold, and drop to run sell side. That could be an option, but personally I'm not trading Aussie dollar right now because I still want to buy from this key level. And if it doesn't come to this key level, then I want to see it gravitate to the upside to run these highs, and then I'll wait for potential retest to buy it to continue higher. But if it doesn't come down here, then I want to see it go up there, and then I'll look for a potential area that we will retest and continue higher. So that is what I'm watching for Aussie dollar. Nothing really much exciting going on today. And we will look at the cryptos as well to see what the cryptos are doing. So for Ethereum, we do have a trade set up on Ethereum lined up, and so far, as you can see, price is coming down there very nicely. And the analysis was from monthly structure is bullish, and then the next thing, so I'll try using a fresh chart so we can see what I'm talking about. So the monthly structure is bullish, consistently creating higher highs and a higher low and a higher high, and then right here created a higher low, and then we expanded to the upside. So we expected price to come down for mitigation of this inefficiency, because we have this high right here. So as you can see, we have this high right here, and then price mitigated that high. After mitigating the high, after breaking this high, we wanted to see a retest at the inefficiency, retested it. Now we want to see a 4-hour break of structure to the upside after that retest. And very nicely, as you can see right here, after we mitigated that position, that inefficiency, we created a high, created a low, and then we broke structure significantly right here. You can see that. So after we broke structure, the key level that I want to see a retest for me to buy and then take it to the upside, this is the key level. And once price mitigates this key level, I will just be looking for a 15-minute shift of market structure to the upside and then look for a buy. And so far, you can see very nicely, this is the key level. Price mitigated it. After that mitigation, we go straight to the 15-minute time frame to look for a shift of market structure to the upside. And right here on 15 minutes time frame, you can see very nicely price created a high right here, and then we created a low, and eventually we broke structure right here as well. So you can see very clearly we broke structure right here. Structure was broken, and after structure was broken, we started to see this down move. So personally, for me to buy, I want to buy from this last down close candle before an expansion to break that structure. So one thing to take note of is the fact that if we use our Fibonacci from this low to this high, you can see this key level, extreme premium, this key level, discount, this key level, extreme discount. So two things are involved in cases like this when price has had an explosive move. Two things are involved to happen right here. It's either price will come down to mitigate this inefficiency, or it will want to come down into an extreme discount, because we still have an inefficiency resting at an extreme discount. Price could still want to come there to mitigate that inefficiency before a potential continuation to the upside. Another thing we can still do is, because we're anticipating for price to rally above this high, so this high is our target, we can use the Fibonacci from the low to that high, from that low to this high being our target. Now you can see so far our extreme discount zone is this key level. You can see that very clearly. This key level is our extreme discount zone. So anything inside here is a beautiful opportunity to buy. So the moment price comes in here, all we're looking for is opportunity to buy Ethereum for it to continue to the upside. So we'll be looking for a potential 5 minutes, 3 minutes shift of market structure inside this key level. So inside this key level is going to be very delicate. Price can come in, show a lot of reaction to go to the upside, to get in a lot of buyers to come in early and then still come down again. But until we tap this high, we are not doing anything. We're just going to be on the sidelines waiting patiently. This is going to be a phenomenal trade if it works out. We'll be inside this key level, waiting patiently. The moment price comes in there, mitigates this key level, the next thing we do is to look for potential entries. We already have a limit order right here at this inefficiency. We already have a limit order right there. But once we're in this key level, we are going to zoom into the 5 minutes chart, 3 minutes chart, looking for price to create a structure. When I say a structure, what I mean by that is for price to create, like we've created a high, a low here, create a high, then create a low. I want to see price create a high and then create a low and then potentially break above that high. The moment I see that, I'm using the high as an entry. I'm not going to use any inefficiency or whatever within the range. I'm using the high as the entry position, irrespective of the fact that price can still come lower, deeper to mitigate whatever. I don't care. The only thing I care about is the fact that I know that 7 out of 10 times price will most likely mitigate the highs before continuous move to the upside. Few times, about 5 times out of 10 times, it will come deeper to mitigate maybe an inefficiency or the last down close candles, but I don't want to risk it. All I want to do is to be in the trade, and once everything is aligned, creating a high, creating a low, mitigating my point of interest. The next thing I want to see a break of structure to the upside. The moment I see that, I'm using the high as my entry, and then anticipation for a continuous move to the upside. If we're correct, if our analysis is right, it's going to take us exponentially to the upside. This is going to be a phenomenal trade in my opinion. And our job as a trader is to follow our analysis, our model, whatever we're looking out to see in the marketplace. All we want to do is wait patiently. We see the step 1, we go to step 2, see step 2, wait for step 3, wait for step 4. After that, execute. That is job done. Nothing else matters to us. If the trade works out, awesome. If it doesn't work out, just another trade. Look for another one. So that is it for me on Ethereum US dollar, and I'll be watching this very closely today. It's basically going to be one of the only trades I'm going to be focusing much on today, and hopefully we do get a trade set up on this one today. So that is it from me. I appreciate you all for tuning in, and I'll talk to you all in the next live stream. Have an amazing day, everyone.